want you to take a second and just imagine a world where your doctor, your pharmacy, and your daily health coach all live right there inside your phone.
Right, which sounds convenient enough.
Yeah, but not just as a static directory or messaging app you use when you suddenly have a fever. Imagine that this system actually knows what's going wrong in your body before you even feel a single symptom.
Exactly.
It knows your baselines, it watches the trends, and it taps you on the shoulder before a minor imbalance becomes, a chronic disease.
But honestly, sounds a bit like science fiction.
It totally does, but that is exactly the reality that HIMS and HERS is building right now. They are aggressively rewriting their DNA.
Yeah, moving away from just, mailing out hair loss pills to engineering a global AI-driven health partner.
And they are taking massive financial hits to do it. So, okay, let's unpack this. Welcome to the Deep Dive. Today, our mission is to analyze the first quarter 2026 earnings remarks from the CEO, the CTO, and the CFO of HIMS and HERS.
And what's fascinating here is the scale of the ambition. When you look at these sources, you see a company that is essentially trying to, to re-engineer the physics of healthcare.
Yeah.
We aren't just looking at financial numbers today. We're looking at a highly detailed blueprint for the future of continuous, data-driven medicine.
Right, because their core objective seems to be engineering the friction entirely out of the healthcare experience. And friction is, it's the defining characteristic of modern medicine.
Oh, absolutely.
If you've ever tried to get a specialist appointment or sit in a waiting room or navigate a pharmacy shortage, you know the traditional system is basically built out of friction.
It's designed around waiting.
Exactly. So, to start, let's look at the most dramatic operational shockwave revealed in these documents. This is their strategic pivot on weight loss.
Which is a market affecting over 100 million adults in the U.S. alone.
100 million. And the way they handled it is this textbook case of absorbing short-term pain for a massive long-term structural advantage.
Yeah, because the demographic reality is just staggering. Over 100 million adults struggling with weight means the demand for effective treatments is unlike almost anything else in modern medicine.
Right.
But the market for these treatments is wildly volatile right now. There are new form factors, shifting pricing structures.
Regulatory scrutiny, all of it.
Exactly. Intense regulatory scrutiny.
And in March 2026, HIMS and HERS made this highly deliberate, almost brutal decision. They completely stopped advertising their compounded weight loss product.
Which was a huge revenue driver for them.
But right. Now, for you listening, we need to clarify what that means. Compounded medications are they're custom mixed drugs formulated by specialized pharmacies.
Right.
They became incredibly popular over the last few years as a stopgap when the big brand name weight loss drugs were experiencing massive manufacturing shortages.
They stepped in to fill the void.
Yeah, and HIMS and HERS had built up an entire functioning physical supply chain to deliver these compounded drugs. And then, suddenly, they hit the brakes.
Just abandon that infrastructure.
They pivoted entirely to prioritizing branded GLP-1 products, specifically through collaborations with Novo Nordisk for the Wegovy pill and pen, and LillyDirect for Zepbound vials and pens.
And the velocity of this transition is what you really have to pay attention to. By shifting to direct access for these branded products, their adoption rates essentially went vertical.
Vertical.
We are talking about fulfilling more than 125,000 shipments for Wegovy products within just 6 weeks of introducing them.
125,000 in 6 weeks.
Yeah. Fulfilling that volume of pharmaceutical distribution in a month and a half requires an incredibly robust logistical backend.
To put that in perspective, they are now on track to add over 100,000 new subscribers per month in this weight loss specialty alone.
Right.
But this pivot, it came with a massive financial wound. It caused a $33 million restructuring cost.
Yeah, that's a tough pill to swallow for investors.
Literally.
Yeah.
They basically had to take a massive write-down on their compounded GLP-1 supply chain. And the CFO noted that about $28 million of that negatively impacted their gross margins by roughly 5 points in the first quarter.
Right, which is significant.
So I want to play devil's advocate here. Wait a minute. It's like a wildly successful local bakery suddenly throwing away all their proprietary house-made dough,
Right.
taking a massive financial loss, just so they can exclusively sell a famous name brand bread. Is the name brand really that much of a guarantee for long-term survival? Why abandon your own system so violently?
Well, You have to look at the mechanical realities of the compounded drug market versus the branded market.
Okay.
Compounded drugs, while they're highly profitable during a shortage, they carry inherent long-term risks. The FDA allows them during shortages, but
Oh, right. Once the major manufacturers catch up on supply, that regulatory window just closes?
exactly, the window slams shut.
Ew.
Furthermore, managing the quality control across multiple compounding pharmacies is an operational nightmare.
So it's a liability, essentially.
It is. So by taking that $33 million hit, which, involves breaking contracts, writing off physical inventory, restructuring logistics, they are clearing the deck. They're expanding their total addressable market, their TAM.
But break down how switching to a branded drug expands the TAM. Aren't they targeting the exact same 100 million people?
They are targeting the same demographic, but with a fundamentally different value proposition.
Yeah, so.
Branded GLP-1s like Wegovy have a psychological weight to them. They carry the highest efficacy rates, proven longitudinal safety profiles, and intense consumer trust.
Because it's the name everyone knows.
Right. HIMS and HERS paired that consumer trust with affordable self-pay pricing. They realized that to capture a highly motivated cohort of consumers, they couldn't rely on a regulatory stopgap.
They needed the gold standard.
Exactly. They had to offer the absolute best-in-class medications. But here is the critical mechanism. They are offering those medications with an onboarding and maintenance experience that the traditional healthcare system simply cannot match.
That brings up a critical question about the medication itself. We throw the term GLP-1 around a lot.
Yeah, it's everywhere right now.
But for the listener, we should probably explain how these drugs actually function in the body, because it explains the behavioral loop they're trying to capture.
It's crucial context.
GLP-1 stands for glucagon-like peptide 1. It's essentially a biological hack. It mimics a hormone your gut naturally produces when you eat, telling your brain you're full while physically slowing down your digestion.
Right.
So the patient isn't just relying on willpower. Their biology is being actively managed.
And that biological management requires continuous oversight. That is where the business model crystallizes.
Okay, tell me about the engagement metrics.
They tell the real story here. Nearly 90% of these new weight loss users download the HIMS and HERS app.
90%.
Yeah. And the average subscriber interacts with a provider 3 times in the first month.
3 times in the first month. I mean, if you think about the traditional model, you see your primary care doctor for an annual physical, maybe a follow-up, and you're lucky if you talk to them 3 times a decade.
Exactly. That frequency of interaction is the entire point. This isn't just a transactional relationship where a doctor dispenses a pill and sends you into the wild.
Right. Good luck. See you next year.
Weight loss via a GLP-1 is a deeply personal, continuous physiological journey. It requires dosage titration.
Which means, like, slowly increasing the drug so you don't make the patient incredibly nauseous.
Precisely. It requires managing those gastrointestinal side effects,
Yeah.
providing dietary lifestyle support so they're losing fat and not muscle mass, and just continuous monitoring.
So by bringing 100,000 new users a month into their ecosystem for this specific high-touch journey, they are building a massive moat of engagement.
It's a huge moat. The branded GLP-1 is the anchor.
It brings them in.
It brings the user in, but the platform's ecosystem keeps them there. It's designed to capture their entire behavioral routine.
So they come for the Wegovy. But because they are opening the app 3 times a month to adjust their dosage, they are suddenly, I don't know, reading articles about sleep hygiene.
Right, or getting a consultation for dermatology, or checking their cardiovascular risk.
Because CFO explicitly stated this strategy, right? Weight loss brings in a highly engaged audience that allows them to cross-sell other products later.
It completely accelerates their economies of scale. When you have a subscriber engaging 3 times a month, the opportunity to introduce them to mental health services or preventative lab testing feels completely organic.
Yeah, you aren't paying marketing dollars to acquire a new patient for dermatology. You're just offering a new service to a patient who already trusts you with their daily physical health.
It's brilliant customer acquisition.
But here is the bottleneck with this stickiness strategy. If you actually succeed in bringing in 100,000 highly engaged patients a month, and those patients expect constant communication,
The math breaks down.
traditional healthcare math completely breaks. You physically cannot hire enough human doctors and nurses to read all those daily updates, titrate all those doses, and answer all those questions.
Oh, the system would buckle.
If a local clinic got 100 new patients in a single week, they'd shut their doors. So how are they handling the scale without the servers melting and the wait times just skyrocketing?
They are avoiding that collapse through a massive, fundamental technological re-architecture. The CTO's remarks in the earnings call are really illuminating here.
Okay, what did he say?
They aren't just slapping a chatbot onto an old website. They have built an AI organization from scratch that now includes 40 AI specialists.
40.
40. We are talking about PhDs recruited from MIT, Berkeley, and seasoned leaders from frontier tech labs.
Oh.
And what this team has engineered is a completely rebuilt operating system utilizing reusable module capabilities and a no-code commercial engine.
Okay, hold on. Let's translate no-code commercial engine out of Silicon Valley jargon. What does that actually mean for the patient experience?
Well, to understand the value of no-code, you have to look at the alternative. In a traditional hospital system, if they want to launch a new specialty clinic, say, a menopause support program,
Oh, the IT integration can take years.
they have to custom code new workflows, integrate new billing codes into legacy software like Epic, and build new patient portals from scratch.
Right.
A no-code commercial engine means HIMS and HERS has built flexible drag-and-drop building blocks. It's a self-serve platform for their internal teams.
So they don't need to call a developer every time they want to change a form.
Exactly. They can configure clinical workflows, adjust pricing, implement promotions, and design treatment plans without writing a single line of new software code.
That's insane.
This structural flexibility is what allowed them to rapidly launch new, highly complex specialties like testosterone, menopause, and lab services in a matter of weeks rather than years.
It's essentially a master template for healthcare delivery, but the speed of deployment is only half the equation. The other half is how they handle the human communication. And this is where the technology jumps from being just operationally efficient to feeling highly futuristic.
The embedded intelligence.
Exactly. They've implemented what they call embedded intelligence at almost every step of the care journey. They currently have an AI co-pilot live on the platform.
And it reads the incoming patient messages and drafts, contextual responses for the human care coaches.
And they also launched Labs AI, an agent that takes a patient's biomarker blood results, analyzes them against their specific medical history, explains the findings, and automatically flags the case if it needs to be escalated to a human doctor.
Which is huge.
And they're rolling out an AI weight loss companion to help monitor those daily GLP-1 side effects.
The mechanism powering these AI tools is what really sets them apart from the generic artificial intelligence we interact with daily, like ChatGPT.
Right. How is it different?
The CTO described their underlying data structure as a closed-loop proprietary data flywheel. They have accumulated 9 years of highly specific medical data.
9 years.
But the critical phrase is closed loop. It means the consumer's initial symptom intake, the provider's diagnosis, the chosen treatment path, and the eventual health outcome all live in one single, unified vertical stack.
Okay, let's use an analogy to explain how that flywheel actually learns.
Go for it.
Think of their AI not as a static medical textbook, but as the Waze traffic app for human health.
Oh, I like that.
Right, because Waze doesn't just read a map of the roads, it watches millions of cars driving in real time. If 1,000 cars suddenly slow down on a specific highway, the Waze algorithm instantly learns there's traffic and automatically reroutes the next car to save time.
Exactly.
HIMS and HERS is doing that with millions of patient symptoms and treatments. The AI is constantly rerouting clinical suggestions based on live, human-verified outcomes.
That is the perfect way to visualize it. Because the alternative is what we see with frontier large language models. The generic AI models trained on the open internet.
Right, just scraping the web.
Those models are pulling information from Reddit threads, Wikipedia, and news articles. They completely lack clinical context.
Yeah.
But the HIMS and HERS AI is generating what the CTO calls clinician-verified training signals.
Okay, what does that mean in practice?
Across tens of millions of customer touchpoints annually, independent licensed healthcare providers are constantly reviewing, correcting, and approving the drafts the AI creates.
So if the AI suggests a dosage of Wegovy that is slightly too high based on a patient's reported nausea, the human doctor catches it, lowers the dose, and that correction is fed directly back into the model.
Precisely. It learns from the correction. The AI isn't guessing. It's being trained by actual physicians in real time.
Wow.
The CTO used a brilliant framing for this. Instead of a patient getting a second opinion from one other doctor, the AI brings the value of 1,000 opinions directly to a single clinical interaction.
That's a great way to put it.
The collective intelligence of the entire medical staff is focused on your specific chart.
I hear the pitch, and the operational efficiency is undeniable. But I have to push back here on behalf of the listener.
Sure.
Here's where it gets really interesting, but also a little scary, right? If I'm sitting in my car right now or cooking dinner, I might be thinking, I do not want a robot managing my physical body.
It's a very common reaction.
If I am dealing with a serious medical issue, I want a human being looking at my chart, not a predictive text engine. It feels like having a medical intern perform a complex surgery just to save the hospital some money. Is the actual empathetic human element getting lost in the name of corporate efficiency?
That fear of automation replacing clinical judgment is, frankly, the defining anxiety of AI in healthcare, and the company's leadership is highly attuned to it.
Okay, so how do they address it?
The operative word in the CTO's explanation is guardrails. They are emphatic that independent human providers remain completely responsible for all clinical decision-making.
So the AI isn't prescribing the drugs.
No, absolutely not. The AI is not replacing the doctor's judgment. It is absorbing the administrative and analytical burden so the doctor has the mental bandwidth to actually focus on the patient's holistic health.
Let's get granular on how that burden is actually lifted. What is the AI actually doing that the doctor used to do?
Think about a traditional doctor's visit. The physician spends the first 10 minutes frantically reading your chart, trying to synthesize your past lab results, your current medications, and the intake form you just filled out in the waiting room.
While you sit there in the paper gown.
Exactly. The AI does all of that instantly. It synthesizes the 50 pages of history, it highlights anomalies, it drafts a response based on established clinical protocols.
Okay.
The human doctor reviews this highly organized brief, applies their clinical experience, adjusts as necessary, and authorizes the care. It doesn't replace the surgeon. It acts as the ultimate surgical assistant.
Laying out the tool.
Right. Laying out all the instruments perfectly, providing the exact vitals needed the second they are needed so the surgeon can just operate. It elevates the quality of care because the human provider is armed with the full context of the patient's history, analyzed against the outcomes of hundreds of thousands of similar patients.
Which a human brain just can't do.
The human brain simply cannot compute probability at that scale.
Okay, that clarifies the dynamic. The AI is the filter, not the final authority. And with a computational system that powerful, capable of analyzing that much physiological data, the entire philosophy of the platform has to shift.
It does.
Which drives us directly into the third major operational theme from these earnings calls. They have built this massive diagnostic engine, and they no longer want to wait for you to get sick to use it.
Right.
They want to find the chemical imbalance before you even realize it's happening.
If we connect this to the bigger picture, you're describing the shift from reactive care to proactive care. And mechanically, this is arguably the most difficult pivot to execute in modern medicine.
Because human behavior is deeply conditioned to wait for pain before seeking a doctor.
Exactly. To illustrate this, let's look at the mechanical realities of their testosterone offering, which the CEO highlighted. They are now serving tens of thousands of men in this specific category.
Yeah, and the clinical results there are striking. 95% of the customers relying on the platform for testosterone support saw a measurable increase in their hormone levels within 2 months.
Which is a massive success rate.
It is. But the CEO pointed out a massive societal friction point. Men routinely write off the physical signs of low testosterone.
They do. They experience chronic fatigue, loss of muscle mass, or brain fog, and they internalize it.
They think, I'm just getting older, or I'm just stressed at work.
They dismiss it, completely unaware that it is a highly measurable, easily treatable chemical deficit.
And that dismissal is the hallmark of reactive healthcare. You wait until a symptom severely disrupts your life to seek an intervention.
Right. What HIMS and HERS is building is a continuous monitoring model. They want to track your biomarkers to optimize your daily baseline, ensuring you are operating at peak health rather than just patching you up when you break.
But to achieve continuous monitoring, you have to eliminate the physical barrier to getting the data.
And the physical barrier to proactive care is the needle.
Yeah, nobody enjoys phlebotomy. Nobody wants to drive to a clinical lab on a Tuesday morning, sit under fluorescent lights, and have a technician draw vials of venous blood from their arm just to see if their vitamins are balanced.
It's the ultimate friction point.
It really is. So to physically engineer this friction out of the process, HIMS and HERS announced the acquisition of a company called YourBio. This company manufactures a microneedle blood sampling technology that allows for painless blood draws right at home.
The mechanics of this acquisition are fascinating. We really need to explain how microneedles differ from traditional venous blood draws.
Please do.
A traditional draw uses a large gauge needle to puncture a vein, which requires a trained phlebotomist and, causes localized pain
And anxiety.
and anxiety. Your BIOS technology relies on a device you place on your upper arm. With the push of a button, a vacuum is created, and an array of microscopic needles, barely thicker than a human hair, painlessly breach the very top layer of the skin
To collect what exactly?
to collect capillary blood or interstitial fluid. It takes a matter of minutes, you don't feel a sharp puncture, and you just drop the sample in the mail.
So by removing the physical pain and the logistical nightmare of the waiting room, you open the floodgates to continuous data collection.
Exactly. It provides what the CEO called the information layer, which is foundational to their future.
Let's look at the implications of this, because it sounds like they're treating the human body the way modern aviation treats an airplane engine.
How do you mean?
Well, a Boeing 777 doesn't wait for the engine to catch on fire to alert the pilot. The internal computers are constantly running microagnostics, tweaking fuel mixtures, and monitoring thermal outputs so the flight remains perfectly smooth.
Right.
The pilot just monitors the dashboard.
The aviation analogy holds up perfectly, but it also introduces a significant human variable. An airplane engine doesn't have emotions.
Right.
A human being receiving a continuous stream of biological data does.
Yeah, and this is where I see a massive psychological risk. Does this level of access create a society of hypochondriacs?
It's a very valid concern.
Right. If I can painlessly check my hormone levels, my cholesterol, and my vitamin D from my couch every 2 weeks, am I going to start spiraling into a panic over every tiny natural fluctuation?
People absolutely do that.
If my testosterone drops by a fraction of a percent because I slept poorly, am I going to demand medication?
It is a profound psychological tightrope. The medical community has long debated the risks of overtesting for exactly this reason.
Because data overload without context breeds severe anxiety.
Exactly. But this is where their technological architecture, specifically the lab's AI and the human care coaches, becomes the critical retention mechanism.
So how does the platform act as the shock absorber for that anxiety?
The goal of providing this data isn't to hand a patient a raw spreadsheet of complex biomarkers and leave them to furiously search WebMD until they convince themselves they are dying.
Thank goodness.
Right. The AI is programmed to synthesize the results within the patient's unique historical context. When the lab results come back, the system contextualizes the numbers.
So it tells a story.
Yes. It might tell the patient, your levels fluctuated slightly, but this is entirely within the normal range for someone of your age and activity level. It translates raw clinical data into actionable, calming narratives.
And if something is actually wrong?
Crucially, if a biomarker actually does cross a dangerous threshold, the system automatically routes the file to a human doctor for intervention. The platform absorbs the data, filters the noise, and only presents the necessary signal.
That makes the ecosystem incredibly sticky. You aren't just trusting them with your medication, you are trusting them with your peace of mind.
Exactly.
So if we look at the strategic map, they've secured branded weight loss to drive massive acquisition, they've built a clinical AI to handle the scale, and they've acquired microneedle technology to gather continuous proactive data.
Which brings us to what's next.
Right. What is the next logical frontier? According to the earnings call, they are looking at two highly complex expansions. First, a controversial new medical treatment category called peptides, and second, a massive push into international markets.
Let's dissect the peptide strategy first, because it perfectly illustrates the tension between rapid financial growth and rigorous clinical safety.
Okay.
The medical leadership at HIMS and HERS sees immense therapeutic potential in peptide therapies, but they're operating in an environment that is deeply unstable.
Before we talk about the market instability, we have to define the science. For you listening, what actually is a peptide, and why is it becoming such a massive trend in health and wellness?
It's a great question.
To put it simply, peptides are short chains of amino acids. Think of them as the smaller cousins of proteins. In the human body, they act as signaling molecules.
Other messengers.
Right. They tell other cells what to do, whether that's accelerating muscle repair, improving skin elasticity, or regulating metabolism.
And the potential applications for anti-aging and physical optimization are massive.
The physiological potential is exactly why consumer demand is skyrocketing. But the CEO used incredibly sharp language to describe the current commercial reality of this demand. He called the current landscape a gray market.
The Wild West.
Exactly the term for it.
A gray market in pharmaceuticals means you have a massive influx of unregulated, unverified manufacturers producing these compounds. Patients are buying peptides online from unknown sources with zero consistency in dosing, purity, or sterility.
Which is terrifying.
And absolutely no clinical oversight. It is incredibly dangerous.
Yeah.
And despite the millions of dollars in immediate revenue they could capture by simply acting as a distributor for these compounds, HIMS and HERS is deliberately refusing to launch a peptide offering.
They are keeping the product off the shelf until the regulatory dust settles. They're waiting for the FDA to explicitly define the safety parameters and allowable formulations.
But they aren't just sitting on their hands while they wait.
No. They are physically building the infrastructure to dominate the market the second it becomes regulated.
This is where their capital allocation strategy becomes vital. Last year, they invested heavily in verticalizing their domestic supply chain. They built their own U.S.-based, highly regulated physical compounding facility.
So they own the factory.
Yes. By
But-
absorbing the upfront cost of building a brick-and-mortar pharmaceutical plant, they guarantee the sterility, the sourcing, and the consistency of the product.
So they are trading the quick, lucrative cash grab of the gray market for an impenetrable wall of consumer trust.
Precisely. In a proactive health model, trust is your only durable asset. If you ship a contaminated batch of peptides and severely injure a patient, the entire multi-billion-dollar platform collapses overnight.
It's a masterclass in delayed gratification. They're constructing the fortress, getting the sterile rooms ready, and waiting for the FDA to give the green light.
Meanwhile,
While they are exhibiting extreme patience with the U.S. peptide market, they're sprinting at a dead run internationally.
they really are.
The sources outline a planned acquisition of a company called Eucalyptus. They expect the deal to close in the second half of the year, involving an initial payment of $240 million.
The Eucalyptus acquisition is a geopolitical game changer for them. It instantly expands their operational footprint across 5 distinct, highly regulated international markets:
Which are?
Australia, the UK, Germany, Japan, and Canada. And this isn't their first foray abroad. The CFO noted that their international revenue has already seen expanding into these diverse global markets acts as a massive force multiplier for their core AI engine.
Explain the mechanics of that force multiplier. How does a patient in Berlin make the software better in Chicago?
It comes down to how machine learning models avoid bias. If an AI is only trained on a homogeneous demographic, say affluent patients in California or New York, it develops an incredibly narrow, biased view of human physiology.
Oh, that makes sense.
It only understands a specific subset of dietary habits, genetic predispositions, and environmental factors. By acquiring Eucalyptus and expanding into these 5 international territories, they are violently diversifying their data intake.
So the AI suddenly has to learn how to diagnose and suggest treatments for completely new disease profiles.
Exactly.
It sees how a traditional Japanese diet interacts with a GLP-1 versus how a British diet interacts with it. It learns different regional care patterns and diverse genetic baselines.
That diversity of data is the holy grail of medical AI. It makes the core intelligence of the platform infinitely smarter, more nuanced, and significantly more robust.
It's all connected.
The clinical insight gleaned from managing a metabolic issue in London directly refines the algorithm's predictive capabilities for a patient in Los Angeles. The network effect is truly global.
It's like they're building a global immune system of data. But let's ground this soaring technological vision in the brutal reality of corporate finance.
Let's do that.
Funding MIT PhDs, building state-of-the-art domestic pharmaceutical facilities from the ground up, and executing $250 million international acquisitions requires a staggering amount of capital.
Oh, absolutely.
We need to look at the actual math because tech companies love to sell a utopian vision of the future to obscure a bleeding balance sheet today.
The financial architecture of this company requires a very nuanced read. The CFO's remarks paint a picture of an executive team that is aggressively prioritizing long-term market capture over immediate short-term profitability.
They are playing a completely different game than traditional healthcare providers.
Entirely different.
Let's run the Q1 2026 numbers and see where the friction lies. They posted a top-line revenue of $608 million, which represents a 4% year-over-year increase.
Solid growth.
Their subscriber base grew to 2.6 million users, a 9% jump. Their adjusted EBITDA, which is an accounting metric that basically shows operational cash profit before taxes and depreciation, was $44 million, giving them a 7% margin.
Right.
That all sounds solid, but then you hit the GAAP net income, and it is a massive decline. They posted a GAAP net loss of $92 million for the quarter.
That $92 million net loss is the metric that traditionally terrifies Wall Street.
Yeah, that's a scary number.
But if you are trying to evaluate the health of a recurring revenue technology platform, stopping at GAAP net income gives you an incomplete picture. You have to deconstruct what is actually driving that loss.
Right, because it's not like the core business of selling treatments suddenly became unprofitable.
Yeah.
The CFO detailed that the $92 million loss includes that $33 million supply chain write-down for the compounded weight loss drugs.
The clearing of the deck.
It also absorbs the massive one-time transaction costs related to the Urbio microneedle acquisition, the legal frameworks for the $240 million eucalyptus deal, and various structural legal fees.
It is the textbook definition of a transition quarter. They are deliberately taking the punches now to build the foundation for the next decade.
And you have to look at their liquidity to see if they can survive taking those punches. A $92 million paper loss is fatal if you don't have cash in the bank.
But they do.
They really do. The CFO highlighted a fortress of a balance sheet. During that same quarter, they generated $89 million in actual operating cash flow and $53 million in free cash flow.
Which is incredibly healthy.
Furthermore, they are sitting on a war chest of $751 million in cash and short-term investments, with another $225 million authorized for share repurchases.
They have an incredibly long runway to execute this transition.
That cash position is why they were able to confidently reaffirm their massive 2030 financial targets. Despite the near-term noise, they are projecting at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA by the end of the decade.
It's an aggressive target.
But I want to dig into the strategy the CFO called investing through the transition. They are explicitly comfortable with near-term gross margin compression. Why is it acceptable to make less profit per user today?
This raises an important question about how we value these companies. It comes down to a concept called the compounding effect of monthly cohorts.
Explain that for us.
To understand this, you have to stop thinking of HIMS and HERS as a traditional doctor's office and start thinking of them as a software as a service, or SaaS. Business applied to human biology.
Okay, SaaS for biology.
In a transactional healthcare model, you need to make a high margin on a patient immediately because you might never see them again. But in a subscription model, the critical metric is LTV, lifetime value.
So if they spend a massive amount of marketing dollars to acquire a patient for weight loss today, and they only break even or take a slight loss on that first month of Wegovy, it doesn't matter.
Right.
Because if the AI companion, the proactive lab testing, and the holistic ecosystem keep that user engaged on the platform for the next 10 years, the initial acquisition cost amortizes into nothing.
That is the core of the strategy. Traditional Wall Street metrics, which are obsessively focused on quarter-to-quarter net income, often fail to capture the massive compounding momentum of a truly sticky health platform.
Yeah.
If a 35-year-old user joins today to manage their weight, and 5 years from now, the platform identifies a drop in their testosterone, and 10 years from now, they're using the platform for preventative cardiology and dermatology,
They never leave.
the lifetime financial value of that single user is astronomical. The CFO is intentionally sacrificing a few points of margin today to lock in millions of these high LTV users.
Okay, I need to look at this with a skeptical eye because it assumes human behavior is perfectly rational and loyal.
Fair enough.
It feels like they are building a massive, opulent luxury hotel. They are giving away the rooms at a steep discount just to get people in the door, banking on the idea that these guests will stay, eat at the 5-star restaurants, and use the expensive spa for the next 10 years.
I see where you're going.
But what happens if the consumers just take the cheap room, get their initial Wegovy prescription, hit their target weight, and simply cancel their subscription? What if the stickiness isn't actually there, and they are left holding $1 billion worth of AI infrastructure with no recurring revenue?
You've identified the existential threat to the entire business model. If churn rates spike, if patients view the platform as a vending machine rather than a partner, the economics completely unravel.
Everything falls apart.
The massive investments in 40 MIT AI specialists, domestic peptide facilities, and microneedle technology become dead weight. And this is exactly why the platform is expanding so aggressively into proactive care and continuous biomarker monitoring.
They know they cannot rely on the drug alone to retain the user.
Exactly. They have to prove their value every single day, not just on the day the pill bottle arrives.
Precisely why the AI is designed for high-touch engagement.
The AI weight loss companion, the daily check-ins, the contextualized lab results, these aren't just flashy technological features.
They're the glue.
They are the core retention mechanics. They are the personalized concierge services that make the metaphorical hotel so comfortable, so deeply attuned to your specific needs, that you simply never want to check out.
The platform becomes the operating system for your physical well-being.
And looking at their projections for the third and fourth quarters of this year, they clearly believe the retention mechanics are working.
Right.
They're expecting a meaningful step up in EBITDA dollars in the back half of the year as these massive new monthly cohorts of weight loss users start to compound and the operational efficiencies of their no-code software engine begin to scale.
It is fundamentally a high-stakes, multi-billion-dollar bet on the evolution of human behavior.
It really is.
They're betting that once a consumer experiences healthcare without friction healthcare that proactively anticipates their needs rather than waiting for them to break, they will never tolerate the waiting room again.
It is a complete paradigm shift. The traditional system forces the patient to be the project manager of their own disease. You have to coordinate your primary care, your specialist, your lab work, and your pharmacy.
It's exhausting.
HIMS and HERS is building an architecture where the platform is the project manager and the patient just has to live their life.
So let's synthesize the sheer volume of strategy we've explored today. We started by analyzing a company confident enough to absorb a $33 million loss, dismantling a physical supply chain just to align itself with the most effective branded GLP-1 weight loss solutions on the market.
A bold move.
We saw how the immense operational pressure of onboarding 100,000 users a month forced the creation of a brilliantly engineered AI-powered data flywheel, a Waze for human health that learns from millions of clinician-verified touchpoints.
And we tracked their fundamental philosophical pivot from reactive sick care to proactive well care, driven by the acquisition of microneedle technology that removes the physical friction of continuous blood monitoring.
We explored how their ambitions have outgrown the U.S., utilizing the eucalyptus acquisition to build a globally diverse intelligence network, all while maintaining strict physical regulatory standards in the Wild West of the peptide market.
And finally, we saw how the financial reality, the $92 million GAAP loss paired with massive cash reserves, reflects a leadership team perfectly willing to compress short-term margins to build an unbreakable compounding ecosystem of lifetime users.
They aren't just selling a treatment for a symptom. They are selling a continuous predictive health partner. And for you, the listener, the relevance of this shift cannot be overstated.
It changes everything.
Whether you are actively managing a chronic condition, trying to optimize your physical energy, or just hoping to catch a biological imbalance before it becomes a crisis, the traditional agonizing friction of the medical system is actively being engineered out of existence. Your smartphone is slowly becoming your primary care physician, your phlebotomy lab, and your personal health coach.
It is an incredibly empowering technological leap. Democratizing access to high-quality, continuously monitored, data-driven medical insight has the genuine potential to elevate the baseline of human longevity and daily physical comfort on a global scale.
It is undeniably empowering, but it also leaves us with a lingering, somewhat philosophical question to ponder as we close this out. Yeah. If platforms like this achieve their ultimate vision, if our phones, our smartwatches, and our microneedles eventually know exactly what our biology needs, down to the precise molecular dosage before we even register a feeling of sickness, does that ultimate convenience quietly erode our own health autonomy?
That's a deep question.
When an artificial intelligence processes millions of data points to know your body better than you know yourself, who is actually making your lifestyle choices? Are we optimizing our health, or are we just following the algorithm's instructions?
It's definitely a fine line.
It's something to chew on the next time your phone gently vibrates to tell you it's time to stand up. Thank you so much for joining us on this deep dive into the architecture of modern health. We'll catch you next time.